studying your last two. I swim med tea when they turned in. The styrene down to mute. And can learn the pole that sunk he died.
Before we can complete Schedule 3, we need to gather all of the information that will be used in the reporting process. This is one of the most important steps in corporate tax preparation. A Schedule 3 can only be as accurate as the information that goes into it. In this example, Holdco has received dividends from multiple connected corporations. We have dividend information from OpCo, MEFGeco, FinCo, and PropCo. For each corporation, we need two key pieces of information. First, the amount of dividends received, and second, the dividend refund generated by that corporation. Let's look at the information we have collected. From OpCo, Holdco received a dividend of $100,000, and OpCo generated a dividend refund of $10,000. From MEFGeco, Holdco received a dividend of $80,000, and MEFGeco generated a dividend refund of $8,000. From FinCo, Holdco received a dividend of $50,000, with a dividend refund of $5,000. And from PropCo, Holdco received a dividend of $40,000, along with a dividend refund of $4,000. At this stage, we're not filling out any forms yet. We're simply gathering data. Think of this step as building the foundation for the entire Schedule 3 preparation process. The checklist on the right side of the slide shows the information every tax preparer should verify before starting. First, identify the corporation name. Second, determine the dividend received. Third, confirm the ownership percentage. Fourth, identify any dividend refund generated by the payer corporation. And finally, verify whether the corporation is connected. These items are critical because they drive both the dividend reporting and the Part 4 tax calculations that will follow. At the bottom of the slide, you can see the reporting workflow. We start with corporate records, financial statements, and T5 information slips. From those records, we gather the dividend information. That information is then used to calculate Part 4 tax. And finally, the results are reported on Schedule 3. A common mistake among students is trying to complete Schedule 3 before collecting all of the supporting information. In practice, experienced tax preparers always gather the inputs first and perform the calculations second. Only after the calculations are complete do they begin filling out the tax forms. That's why the memory rule on this slide is so important. Schedule 3 starts with good information. If the input data is correct, the calculations become easier, the reporting becomes more accurate, and the completed tax return is much more reliable. In the next slide, we'll take this information and begin completing Schedule 3, starting with the reporting of dividends received from connected corporations. Now that we've gathered all of the required information, we are ready to begin completing Schedule 3. The first section we'll focus on is Part 1, which reports dividends received from taxable Canadian corporations. In our example, Holdco has received dividends from 4 connected corporations. OpCo paid a dividend of $100,000. MEFGeco paid a dividend of $80,000. FinCo paid a dividend of $50,000. And PropCo paid a dividend of $40,000. Each of these corporations is connected to Holdco, so each dividend must be reported on Schedule 3. Notice how the Schedule 3 form in the center of the slide contains a separate row for each corporation. For every dividend received, we record the name of the payer corporation, indicate that it is a connected corporation, and enter the dividend amount received. This creates a complete record of all intercorporate dividends flowing into Holdco during the year. When we total the dividends from all 4 corporations, the result is $270,000. That amount is reported as the total dividends received from taxable Canadian corporations. At this point, many students become concerned because it appears that Holdco has earned $270,000 of additional income. But this is where Section 112 becomes important. The dividends are reported. However, because they are dividends received from taxable Canadian corporations, Holdco is generally entitled to claim the Section 112 intercorporate dividend deduction. As shown on the right side of the slide, Holdco claims a Section 112 deduction equal to the total dividends received. In this example, the deduction is $270,000. As a result, the taxable impact becomes zero. This is one of the most important concepts in corporate taxation. Reporting and taxation are not the same thing. The dividends must still be reported on Schedule 3, even though the Section 112 deduction may ultimately eliminate the taxable income effect. CRA still requires this reporting because the information is needed for other tax calculations, including Part 4 tax, dividend refund tracking, and RDTOH administration. The section labeled "What this means" summarizes the practical outcome. First, all dividends from connected corporations must be reported. Second, those dividends are generally deducted under Section 112. And third, even when the taxable impact is zero, the reporting remains important. The memory rule at the bottom of the slide captures the entire process. Report all connected corporation dividends on Schedule 3, even if taxable income becomes zero because of the Section 112 deduction. So the key takeaway from Part 1 is simple. Record every connected corporation dividend. Calculate the total dividends received. Claim the Section 112 deduction. And recognize that the taxable impact may be zero, while the reporting requirement still remains. In the next slide, we'll move beyond reporting dividends and see how the calculated Part 4 tax amount is entered into Schedule 3 and ultimately creates Holdco's RDTOH balance. We have now reached the final step in the Schedule 3 reporting process. In the previous slide, Holdco reported all dividends received from its connected corporations and claimed the Section 112 deduction. Now we need to report the Part 4 tax that resulted from those connected corporation dividend refunds. Recall from our earlier calculations that Holdco's allocated Part 4 tax was $19,600. That amount was calculated by applying Holdco's ownership percentages to the dividend refunds generated by the connected corporations. The calculator on the left side of the slide represents the completed allocation calculation. At this stage, the calculation work is finished. The only task remaining is reporting. The highlighted section in the center shows where the Part 4 tax amount is entered on Schedule 3. The allocated Part 4 tax of $19,600 is reported in the Part 4 tax section of the form. This is the key reporting entry that links all of the earlier calculations to Holdco's tax return. Many students mistakenly think that Part 4 tax is simply another corporate tax expense. But in reality, Part 4 tax serves a much larger purpose. It creates Holdco's refundable tax balance. As soon as the $19,600 of Part 4 tax is reported, Holdco establishes an RDTOH balance of the same amount. That is why the vault on the right side of the slide is so important. The Part 4 tax does not disappear. Instead, it becomes Holdco's RDTOH account. You can think of the RDTOH account as a storage container for refundable tax. The tax has been paid today, but Holdco may recover it later when dividends are paid to shareholders. The reporting workflow across the middle of the slide summarizes the entire process. First, Holdco receives dividends from connected corporations. Second, ownership percentages are applied to determine the allocation. Third, Part 4 tax is calculated. Fourth, The amount is reported on Schedule 3. Fifth, holdco creates its RDTOH balance. And finally, that RDTOH balance becomes the source of a future dividend refund when profits are distributed to shareholders. The panel on the left shows everything holdco ultimately reports. Connected corporation dividends of $270,000 are reported in Part 1. Part 4 tax of $19,600 is reported in the Part 4 tax section. Together, these entries complete the Schedule 3 reporting requirements for this example. The golden memory rule at the bottom captures the entire chapter in 3 simple statements. Dividends go into Schedule 3. Part 4 tax goes into Schedule 3. Part 4 tax creates holdco's RDTOH. Those 3 ideas connect everything we have learned. The final reporting pipeline at the bottom provides the complete story. Report the dividends. Calculate the ownership-based allocation. Determine the Part 4 tax. Report the amount on Schedule 3. Create the RDTOH balance. And eventually recover that refundable tax through a future dividend refund. The final result is exactly what CRA intended. The connected corporation dividends are properly reported. The refundable tax is allocated fairly based on ownership. The Part 4 tax is tracked through holdco's RDTOH account. And the refundable tax remains within the corporate system until profits are ultimately distributed to the shareholder. At this point, Schedule 3 is complete, and you now have the full picture of how connected corporation dividends, Part 4 tax, and RDTOH interact within a corporate group.